Hey, everybody. Welcome to the morning market briefing. It's Monday, August 22nd, 2022. Hope you guys are doing well out there. Hope you had a good weekend. Rough start, at least in futures trading right now for equity markets. Dow futures down 1%, S&P futures down 1.2, NASDAQ futures down about 1.5, gold down, silver down, oil down. Everything down, at least at surface level. Ben, even as we look at crypto, surprisingly, crypto down, despite being an excellent hedge to every other type of investment. That's a joke. What are we seeing in the market, and what do you think's hitting everything right now?
I think you had the market falsely up a little bit too much. We talked about it last week and how the market had really rallied pretty strongly and started to get overbought. And then you had the going into options expiration. There were a lot of people who had bet against the market, who had puts expiring and things like that on last Friday. Those options have all come off the table now, so they have to re-hedge, which means they have to now short the market essentially again. And I think that we're starting to see some of that come into the market. So that's that. And then also you had the issue on top of that Russia is again stopping exports on the Nord Stream pipeline from August 31st to September 2nd due to maintenance. They had already reduced deliveries to 20% of capacity because of, quote, technical issues with turbines. And then they made this announcement. Gazprom made this announcement on Friday afternoon. So that's hitting Europe. Euro's down to parity again. It had rallied to about 102.50, maybe even 103, but now we're back down to 1. It actually hit 0.9994 this morning, so it's cheaper to buy. It was at one point this morning cheaper to buy a euro than a dollar, and that's just not going to help the inflation picture in Europe, which the ECB I think is meeting next week, and we'll have to see what they decide to do. Right now, their target rate is negative 50 basis points. So if they raise it even by 25 basis points, you're still talking negative 25 basis points for the rates in the Eurozone. It's just a very tough time in Europe. Again, we'll have to see where this goes. But the more that Ukraine kind of fights back, the more Russia gets irritated and then tries to hit Europe. So it seems like we're in this cycle, and I don't really know what's going to break that cycle.
Yeah, it just keeps going, and I kind of am in a way surprised that we're still kind of seeing this back and forth kind of rotation, but in a way also, like, I don't think anybody really has a path to resolution, so I would expect it just kind of continue. Maybe at some point it becomes less impactful, at least as it relates to news headlines, but it's just going to continue to be a problem. I don't know how Europe digs out of it.
Yeah, I mean, at one point last week, I was thinking that we may be peak fear in Europe. They've sufficiently scared their citizens, and because I mean, the UK was talking about 4 days of no electricity in January, no heating in January. And then my dad was telling me this weekend, he remembers when he was growing up in the early 70s when the coal miners striked, and all they had was a coal-fired fireplace. They didn't have any heating. They didn't have like anything in their home. And I asked him how did he stay warm, because this was in the middle of winter. He said, "Oh, we just got out of the paraffin lamps."
Whoa, wow.
And I mean, that's kind of the mentality there, and I think it's very interesting to see that, and they will make it through, but it's gonna be tough unless something changes on the gas supply situation.
Yeah. Speaking of gas and Warren Buffett, Buffett still very, very interested, it would appear, in the energy space, in oil particularly. Has gotten permission to buy up to 50% of Oxy shares, Occidental, but hasn't really made anybody aware of the plans. He seems to like the CEO there, Vicky Holub. Thinks she's done a good job, but wants to have a bit of a position. Ben, what do you think his angle is here?
Well, I kind of sided with Carl Icahn on this. He was very much against the Occidental Petroleum acquisition of Anadarko, which I continue to this day think that it was a very poor acquisition. They got a little bit lucky that oil prices really spiked, and they were able to pay a little bit of the debt down. But Buffett is basically saying, yeah, they have a really good plan to pay down debt, increase the dividend. I'm like, well, you can only do one of those things. I mean, with a given amount of cash, you can pay a dividend, pay down debt, or invest in the company. And yeah, it's great to do all three, but I mean, that's kind of what you do as a business. I don't know. It's just very interesting to hear the spin zone on that. Carl Icahn is out of the stock. Warren Buffett likes it, the company, but it's really right now bet on oil prices. And I think there are better ways to play oil than Occidental right now.
Yeah. Occidental, it seems like one of these companies that they always kind of get in their own way. It's odd. It's an odd company, it seems like to me, for Buffett to be that interested in.
I agree. I mean, Chevron, I could see him interested in one of these companies, Phillips 66.
It seems to me, yeah, it seems like he goes with the more stable, not that Oxy's not a long-standing known entity, but he tends to go with these larger, more stable companies, or these companies that just nobody's really paying attention to because they're private. So kind of interesting. Tommy, any thoughts?
I mean, you think there's any possibility, say he takes a controlling stake, even makes it a subsidiary of Berkshire Hathaway? I mean, his whole game is essentially free cash flow, right? He moves cash from around the businesses that are cash flow positive and uses that to make the other ones cash flow positive. I mean, it's a potential, should he take a controlling stake, that he could start flowing some of the Berkshire Hathaway cash, pay down that debt, increase the dividend, and basically turn the company around using his own clout.
Or if it would have any benefit to like Pilot Flying J.
Yeah, exactly. Yeah, he's got a lot of overlap. He owns, I'm not sure if he's bought the whole thing yet, but he has a controlling
he's
stake
closed
in
that, I think,
Pilot Flying J. Shout
Almost
out
an
to the
internal
Haslam's.
hedge.
Yeah, the world's worst boosters for football, if you were curious.
Yeah. Tom's got a real bone to pick with them. Amazon buying Signify Health. This is another company similar to the type that they've been kind of rolling up in the medical space. Interesting as they continue to kind of build healthcare infrastructure, I guess would be the way to put it. They are making a value offer at $8 billion, currently at a market cap of $5 billion. They're hoping to close this CVS, UNH, also interested in United Health. And is the play here as transparent as it seems to be? Amazon just really jumping into healthcare?
I think so. It'll be interesting to see how disciplined they remain on price, because with CVS in there, remember, Amazon already beat CVS to the purchase of One Medical earlier this month. That was a $4 billion deal. It's again Amazon versus CVS, and now UNH is in that bucket as well. I would think that the synergies between UNH and Signify and CVS and Signify are more significant than the synergies between Amazon and Signify. However, Amazon may be less disciplined on price and may just need to make a more expensive purchase in order to grow their health care side of the business. So I'm curious to see who ends up winning this. My money would actually be on UNH, but it's going to be a big one. It would be a big one for UNH, and they'd have more antitrust stuff to deal with than if Amazon bought Signify. So there's a number of countervailing factors here that this means this deal will be very interesting to watch who ends up winning it. What's interesting is people have had many years to actually make this purchase. It was actually owned by a private equity company called New Mountain Capital. New Mountain actually brought it public at a deal price of $24 a share in February of 2021. So when you're making the decision to go public, you're probably also looking at other potential strategic options. And they decided to go public instead. And since that time, it's kind of just meandered around in the 20s, and it went down to $10 at one point. It's come back a little bit into the low 20s right now. This deal would be probably in the high 20s to about $30. I'm curious to see where this ends up going. Signify provides the technology backbone to help employers, health plans, and health systems with in-home care. So there are some, it is a real business, but I don't know. Well, I guess we'll see what happens, but clearly Amazon's making a big push into this, and CVS and UNH are trying to hold on to their territory.
Tom, we've got the Super Bowl of the Fed, Jackson Hole, coming up this week. Begins on Thursday. Powell will speak on Friday. What are you looking for this week? I mean, that's certainly the biggest economic headline of the week.
I think based on how futures are moving, I think we're looking for a hawkish statement. We've seen quite a reversal in fixed income over the last week or so. we've seen, just like the equity markets, a lot of options roll off the table, and it seems like people are getting pretty short on treasuries. I mean, we bumped up against 3% on Friday on the 10-year, which is the first time we've seen that in quite some time. And there's about 15 op-eds on Bloomberg this morning about what they think is going to happen. I think if I had to guess the stance, I think that we're going to see Jay Powell be relatively hawkish, saying that they're going to do whatever it takes to bring down inflation. And I think, kind of based on some statements he made in the July meeting, I think it's entirely possible that they're going to either eliminate or curtail their amount of forward guidance they're giving. I think the volatility around both the stock market and the bond market, as it relates to the Fed saying, hey, we're going to do 50 basis points and then they do 75, or we're going to do 25 and then they do 50, causes a lot more volatility than if they just said, hey, we're going meeting by meeting. We're going to figure this thing out as we go along. And I think that's probably the outcome. That's sort of how I'm leaning. But there's been a lot of conflicting signals. I mean, we've seen, really good jobs numbers. We've seen softer than expected CPI. But at the same time, we've seen, an erosion of the consumer. It's just, we haven't seen, any real effects other than the fact that CPI came down, that the Fed's having any impact because the jobs market is so strong. And so I think that they think they need to continue to be strong, continue to push it down. We've got a little bit of momentum on the CPI side, and they can get inflation down. Being aggressive sooner rather than later, I think, is probably the playbook. But again, it's very difficult to predict these things. There's a lot of conflicting information out there right now.
Yeah, I think the meeting by meeting thing probably makes the most sense and gives them the most agility without totally rocking things. Ben, do you have any other counter view? I mean, I don't know how they go with a more prolonged view. I just don't know how they get there.
Yeah.
If we're continuing to get data that's relatively surprising one way or the other, I don't know how they go out on a limb and really say, hey, here's where the next.
Yeah, I think the title of the conference, Reassessing Constraints on the Economy and Policy, is basically also going to lead into reassessing constraints on what the Fed can do. And what can the Fed do, and what is the Fed powerless to do? And I think that they're going to default into what is safe, and what is safe is to look at the incoming data and respond to that. Right now, we're at 2.7 implied hikes for September. I think increasingly we're looking at 3, but we won't really know until probably beginning of September. And right now, I think you have 3 hikes baked in unless we have weaker than expected data. Weaker than expected unemployment data, or weaker than expected CPI data.
So this is one thing that I read, not from what I would consider to be a high level assessment of the Fed, but one thought I saw was that the reassessing piece is that they may choose to reset the mandate on inflation from 2 running hot, 2.5 ideally, to 3. Like, say, we're not shooting for 2 anymore. 3% is more realistic. We can only have so much effect. And that might be the reassessing pieces, that they may actually change the long-term inflation target because of the situation we're in, which sort of resets the expectations across the board. It could potentially lead to, another day of euphoria from something coming out from the Fed, but ultimately is probably not a good thing.
Wow, that would be incredibly dovish. And also bearish for markets.
Yeah, it's like they could theoretically be hawkish by raising rates more aggressively, but also be dovish by resetting the actual outlook for inflation.
Yeah, a lot of variability there. So we'll definitely be watching that closely Thursday and Friday, probably even following up with it in Monday's call next week. Last thing, Tesla 3-to-1 stock split coming up on Thursday. Is that right? We've also got Tesla announced that their FSD, their full self-driving package, is going to have a price increase going up to $15K. Previously it was $12K. So
people who've got full self-driving, who I've known, said it's the biggest waste of money that they've had, because they can't even use it at the present time.
Yeah, I've got a good friend that has it, and he just does not trust it.
So I think the bloom is a bit off the rose in terms of the stock splits. You saw that with Google, you saw that with Amazon. You didn't get those big bounces that people have been looking for, and I think that will probably be the same case for Tesla. But they continue to defy economic gravity. We'll see what happens.
All right, we'll wrap it up there. We'll be back tomorrow morning at 8:30. Hope you guys have a great day. Talk to you soon.